Can I afford an investment property? This is by far one of the most common questions we get about property investment, and it's a really tough one to answer because, well, it depends. When you put your application through a bank, they're going to run it through a series of 3 tests, and I'm going to give you a really easy way to see where you sit within these 3 tests in today's video, and we're also going to run through some real scenarios so you can get a sense of whether you might be in the position to invest or not. Now let's talk about what the bank's looking for. Usually it's 2 key things. Deposit, do you have enough deposit for the property? That's what we in the industry call equity. But then you've also got income. Can you afford the mortgage? That's what we in the industry call servicing. Now these aren't the only ones, but they are the key ones. Now we're going to start with equity because there's more hard and fast rules around it, and so it's easier to conceptualize. Now the test that the bank uses to test your equity is what we call LVR, loan to value ratio. And this is all about making sure that if house prices did fall, that the mortgage isn't higher than the house, that you've got enough deposit in there. Now, there are a couple of ways that property investors can get the equity for that deposit. Most commonly, they use the equity they've already built up in their own house, though sometimes they'll also use savings as well. Now, what's the minimum amount of equity you need? Generally, about 125K. Now, what that'll get you is a 625K townhouse, new build townhouse based in Christchurch, which is a pretty entry-level investment property. Now, we have had some people start with lower than that, about 100K for a 1-bedroom apartment, but 100, 125, 150K worth of usable equity, hey, that's enough to get started. Now, I'm going to skip past how you actually calculate this because you're going to be able to use the spreadsheet that I'll show you in a second. Let's now turn across to the income side, the servicing side of the equation. So, how much do you need to earn? Well, again, it depends, and I want to tell you what it depends on before we get into the detail of it. It depends on the type of property you're buying. Is it new or is it existing? That's going to impact how much of the rent the bank uses in their calculations. How much is that property going to rent for? How much do you earn? Is it split across 2 income earners where you'd be paying less tax, or is it concentrated in one high income earner where you'd pay more tax? How many children you got? Is it 1? If you've only got 1, you won't need to earn as much. If you've got 72, you're going to need to earn a lot more income. And how much existing debt do you have? Do you have a lot of debt or a little debt? That's going to impact it, as well as a whole heap more things. Now, in order to take all of these, it depends, and actually give you some hard and fast numbers, I've built you a spreadsheet, which I'll show you in a second. But first, I want to tell you about the 2 tests that the bank run through when they're testing your income. The first is called UMI, Uncommitted Monthly Income. And that's about the bank wanting to make sure that if interest rates rose or you didn't have as much rent coming in, that you'd still be able to afford the loan. In other words, that after all of those test conditions are applied, do you still have some money left over? That's the UMI test. Then we get to the DTI, the debt to income ratio. And this is about making sure that you haven't taken on too much debt compared to the income that you're earning. Now, there is a bit more leeway in this one, but it's still important to run through, especially since the Reserve Bank is currently considering debt to income ratios for all of the banks. Now, to run through all of these different tests, I've built you a spreadsheet. You're going to be able to download this down in the description. I'll drop a link down there. But what this essentially does is it runs through those 3 tests, LVR, UMI, DTI, and it looks at which one do you score the lowest on. Which of these is your limiting factor? And that's where it says, well, that's what we think you'd be able to borrow. So it ain't perfect, but it does give you a decent simulation. It's not a guarantee of finance, but it does give you a pretty good ballpark or indication. Let's now run through some scenarios using that spreadsheet so you can get a sense of how much income somebody would have to purchase an investment property based on their situation. So for scenario number 1, let's talk about a couple who have 2 cars but no kids, 500K personal mortgage on their own home, no other debt. What's their goal? To purchase a 625K townhouse, borrowing all of the money, no cash deposit. Well, how much income would they need? Well, as you can see, debt to income ratio is their limiting factor. That's what they're scoring the lowest on, and they would need about a 71K income or a 71K salary each as a ballpark to be able to purchase this investment property. Let's go through scenario 2. This time, again, looking at a couple, $300K personal mortgage this time, so a bit lower. But this time I'm saying, well, they've got 2 kids, they've got some childcare costs, and they've got lots of personal debt. So $10K hire purchase for a lounge suite, and then also $30K personal loan for a car. Again, these guys want to purchase a $625K townhouse too. How much income do they need? About $168K worth of household income. As a ballpark, in this scenario, I've said one of them's on $120K, the other one is on about $48K. Let's come across to scenario 3, and this is an interesting one because I've tried to say, well, what's the bare minimum amount of income somebody would need to purchase their first investment property? So here I'm considering a first-time buyer. They don't own their own home yet. They've got no rent that they're paying, and they've got no mortgage. Perhaps they're living with their parents rent-free. In this case, I'm saying, well, they don't own their own home, so they've got to have a $125K deposit to purchase that $625K townhouse. How much income would they need? About $52K worth of household income as a ballpark. So that's kind of the bare minimum. If all of those factors were constant for you, you'd need a lower amount of income. But look, best way to figure out are you in the position or are you not is to download that spreadsheet I've just shown you. So what I'm going to do is drop a link down in the description where you can download that, run your own numbers, see where you're at, and then also, while you're down there, hit that subscribe button, hit the like button, and also that little bell so you get notified about all our future videos.